Hello traders, welcome to Snipe the Trade. I'm Orlando and today we're going to be discussing the US dollar Japanese yen. And the reason we're going to discuss the US dollar Japanese yen is because right now this currency pair is at a very extreme level. If you remember right before last year, right before December, we were kind of breaking out of a very strong move to the downside from the highs around 121, 122 to a low of around 98. And right now we have been pushing up mainly due to the dollar and the yen devaluation. All right, so right now what we are testing are these levels, which are very interesting because these are very strong levels of support or historic support. If you can see right here, we do have some very strong, or we had some very strong buyers at the 118.20 level, all around the 118.20, 118 level. Then we broke down, but we managed to close up on the daily bar, which is a very important close because buyers did break through this important level on August, around August 24th. No, yes, August 24th. But buyers kept price up, and we kept on testing this level until we broke with it and tested the 99.98 level. All right, and then we broke to the upside, and we are testing these levels right now. So we are trapped inside of a range, and the range is 118.20, 114.90. And why are we taking 114.90 as a strong level? Well, because when we broke to the upside, we tested these zones also very strongly, and when we broke with this down move, we tested them again before breaking to the upside. And as you can see, we tested them as support, and then we tested them as resistance before we had these two very strong days to test the 118.20 level, which is also the 76.4 of the entire move to the downside. So if we go to the forward chart, we might see things differently. Well, not differently, but we are going to see where we are right now. And as you can see, we are trapped in a range. Well, not kind of a range, but we are trapped between this very strong 118.20 level and the 114.90 level, which was tested last week, I think, or no, it was tested, yes, last week. So what we are doing right now, we are actually we do have a pending order to sell the US dollar Japanese yen, and the reason is well, I'm going to show you why. I'm going to go to the hourly chart, and as you can see right here on the hourly chart, we are testing some very strong levels, which are these levels of support, right? And remember that support are not straight lines, but are indeed levels. So basically, this is our area of interest. Right now, we are actually testing it. And it is also, let me see, we don't have a Fibonacci retracement level, but it should be around the 61.8. If we go to the properties and let's use a brighter color, and we use the default Fibonacci levels, you can see that we indeed are around the 61.8 level for this retracement. And let's get rid of the Fibonacci level so we can see price action more clearly. But this test is not indicative of a bounce to the downside. I mean, we did have some bearish pressure at this point, as you can see, and now we are trading to the downside. But the main reason we are looking at this level is because this level is a very thick level. As you can see on the volume profile, we do have some very important point of controls for today's session and from past sessions, which are where sellers are going to be located. But of course, we need to break with this last POC to the downside, which is the one around the 117.05 level, for a true confirmation of the move down. So basically, this is our view on the short term on the Japanese yen, on the US dollar Japanese yen, I'm sorry. But on the larger point of view or the larger time frames, we do see a break of this 118.21 level with a very strong dollar at the moment and a weak yen.